Your financial health is important and can be linked to your overall physical and mental health. After all, financial stress can cause serious issues, such as strained relationships, disrupted sleep, and exhaustion. This is why it is important to conduct a financial checkup at least once a year. This can help you stay on track to reach your broader financial goals, and you don't have to be a financial expert to complete the evaluation. To help you get started in analyzing your finances, we will take a look at the 10 major areas of financial health. Welcome to Financial Synergy, and in this video, we will talk about some steps involved in the financial checkup process. But before we do, make sure to subscribe to our channel and turn on the notification bell so you'll get updated of our future uploads. Starting at number 1, identify your goals. The first step in your financial checkup is to analyze your financial goals. Have you made any progress on them this year? If not, how did you fall short? Can you determine why? Have your goals been modified during the year? If this is the case, update them and write them down. Next, examine what new financial goals you'd like to build. For example, you might wish to completely fund your 401k at work or add $1 million to your emergency fund. Set specific goals and break them down into monthly, quarterly, and yearly action steps to achieve them. Step number 2, savings. Would you be capable of surviving an emergency, such as a vehicle accident or natural disaster, if it occurred today? If not, make it a point to put money aside for an emergency fund. This financial cushion should cover 3 to 6 months of living expenses, allowing you to be ready for anything life throws at you. However, in addition to an emergency fund, you should save for long-term goals regularly. There are differing views on how much money should be saved away from each paycheck. Ultimately, the amount you save will be determined by factors such as your income and fixed costs. To be safe, strive for a savings rate between 15 and 30%, with a preference for higher savings rates where possible. Step number 3, evaluate changes in your personal situation. Have you experienced any changes in your personal status in the past year, or do you anticipate any big changes in the near future? For example, a job change, adding a baby to your family, retiring, buying a house, getting married, or moving. These can all significantly alter your income and lifestyle. If you don't already have a budget, consider utilizing it as a financial tool. Budgets help curb unnecessary spending by setting a realistic financial goal and allocating monetary resources for the week, month, or year. Budgets are flexible and highly customizable, so it'll be well worth your time and effort. Whether or not you budget, pull up your latest credit card statements and do your best to tabulate your expenses into different categories. For example, eating out, bills, and entertainment. Then ask yourself, did I spend more than I earned? Am I on track to meet my goals? What categories have I spent disproportionately on? Where can I save more? Use your observations to set limits for each category. Perhaps you noticed you spend as much on clothing as you have on groceries, and that you need to readjust the limit next month. If the thought of budgeting overwhelms you, forget the days of writing and calculating your expenses by hand. There are plenty of apps to make the process easier, such as You Need a Budget and Mint. You may need to adjust your budget expenditures, savings, and investments. If you've added to your family or seen a significant increase or decrease in your income, your tax filing may well need to be altered. Making the time to plan ahead for these adjustments will ensure the transition is much easier. Step number 4, protect your assets. Next on your financial checkup list is considering how effectively you are protecting your assets. Start by checking your homeowner's or renter's insurance as well as your health and vehicle insurance. Then, don't forget to preserve your most valuable asset, your ability to earn an income with long-term disability insurance. While you're checking your insurance coverage, take a look at your premiums as well. Then, consider whether you can save money by switching to a different carrier or bundling your various insurance coverages together with the same provider. Step number 5, prepare for the unexpected. Evaluate your will and, if applicable, your estate plan. Have any changes occurred that necessitate updating? If that's the case, you may need to revise your will. Also, check your life insurance coverage to ensure that you have a large enough policy to financially secure your loved ones if something were to happen to you. And if you don't already have life insurance, you should acquire it sooner rather than later. Your premiums are likely to be lower if you are younger and healthier. Consult with a life insurance agent to determine if a term or permanent life insurance policy is right for you. So guys, do you have any questions so far? Let us know in the comments section below. And don't forget to leave a like and subscribe to the channel to watch more informative content in the future. Now, let's jump back into our financial checkup list. We are moving towards step number 6, evaluate your investment performance. Make a return estimate for each of your stocks, bonds, or mutual funds. Do you think their performance in comparison to the rest of the market is satisfactory? If you don't think the investment will recover its losses, it's time to sell. The end of the year will be a good time to take advantage of tax relief. Harvesting losses enables you to offset capital gains on investments with losses on underperforming assets. Because investments in a 401k or individual retirement annuity (IRA) are already tax-advantaged, this method works well in a taxable brokerage account. When recovering tax losses, keep an eye out for the wash sale rule. This Internal Revenue Service (IRS) rule dictates that any new investments you purchase within 30 days of selling an investment to harvest losses must be substantially different. Step number 7. Evaluate your debts. As part of your annual financial checkup, consider how well you're managing your debt. Analyze your debt-to-income ratio in detail. Has your credit card debt decreased this year? If not, it's time to reassess how you utilize your credit cards. It isn't easy to invest when you spend too much of your money on credit card insurance payments. What is the current interest rate on your mortgage? Should you think about refinancing? Even a minor reduction in interest rates can make a significant impact on the life of your mortgage. But you should consider closing fees to determine whether it's beneficial. Finally, where is your credit score? If you haven't already obtained free copies of your credit report, now is a good time. Annualcreditreport.com provides one free copy of your credit report every year. Once you have received a copy of your credit report, carefully review it and dispute any mistakes you find. Scoring above 700 is considered good, and over 800 is exceptional. While it's disappointing to see a lower number, remember that this number can change throughout your lifetime and you can help. To improve your credit, pay your reported bills on time. Second, apply for new credit cards only as needed. Third, try to avoid adding unnecessary loans or default debts. Good credit affects more than you might expect. It can help you qualify for a mortgage or even secure a job offer. Step number 8. Reduce your income taxes. This is an excellent time to plan for next year's taxes. What can you do to minimize them? First, add up all your allowable deductions and see if you can itemize them. Second, review the list of allowable deductions and make sure you take advantage of any you're eligible for. Finally, consider grouping deductions into 1 year or accelerating deductions by paying tax-deductible items head-to-head of time to help you reach the tax deductions threshold. If you're close, prepay a medical bill or schedule an elective surgery before the end of the year to save some money on taxes. Step number 9. Review your retirement plans. Take a look at how you're doing with your retirement assets. Are you making the contribution limit to your 401k plan? This is one of the most effective tax-cutting strategies available. Is there another type of plan available if your company does not provide a 401k? If not, you might consider opening an individual retirement annuity (IRA) on your own. Check to see whether your workplace has additional options to save, such as a health savings account. A health savings account (HSA) isn't a retirement plan per se, but it's an excellent way to save for future healthcare expenses on a tax-advantaged basis. Only high-deductible health plans are eligible for high savings accounts. They do, however, provide 3 tax benefits: tax-deductible contributions, tax-deferred growth, and tax-free withdrawals for eligible medical costs. Congratulations if your financial situation is in good condition. If it could use some work, at least you know where you should focus your efforts. Remember to update your yearly financial checkup at the same time the following year to monitor your progress. Lastly, Step 10. Consider downsizing your space. Downsizing has become a big trend in the past few years. We really don't need much in the way of things and space. So reducing your household stuff is good for the environment, your wallet, and your well-being. If you can't downsize, perhaps try to declutter. It may feel good to reorganize your space and remove all the extra, unused items. It'll also make cleaning more efficient, allowing you to spend more time on what you enjoy. It may also save you money and time in maintenance and storage costs. It's important to make time now to review your finances. Don't live on autopilot and assume everything is going well. Make financial checkups a regular part of your financial routine. Do you review your budget and investments regularly? Let us know in the comments below. I hope you now understand how to do a financial checkup and keep your finances on the safe side. If you found this video helpful, please give us a like and share this video with your friends. Don't forget to subscribe to this channel and turn on the notification bell to be notified of our future uploads. Once again, this is Financial Synergy, and that's all for today. Thanks for watching. See you next time.